What's going on, traders? Welcome back to the weekly Forex Outlook and Reviews. Hope you had a good trading week this week. There's been some fantastic moves in the market. So hopefully you was able to take advantage of them. It is now April, so we do suspect that the markets are going to start to pick up in volume and we're going to start to see some real movements. So let's just take a look at some of the news for this week. On Monday, we have red folder news at midnight. So we should be all right. That's Sunday into Monday for the US dollar. Let's see if that strengthens or weakens the dollar. The forecast for that is quite good. So if it is as expected or more than forecasted, then we should see a strong dollar moving into next week. We have CAD news, which, well, I'm not too worried about myself, but at 3:30 p.m. we have some Aussie dollar and yeah, I mean, I wouldn't worry about that too much. Moving into Tuesday, April the 13th, that is Tuesday, April the 13th, we have some CPI news at 1:30 p.m. In terms of the actual, it's forecasted to be better. So if that happens, then we should get into some seriously good trades next week, just focusing on dollar strength. Fingers crossed for that one, because that will really help us out. Moving into Wednesday, the 14th of April, we have New Zealand dollar news. Not too fussed about that. Be very careful about these 3 a.m. or 1 a.m. news movements on the New Zealand dollar, because they are wild. 5 p.m. we have some red folder news as well. Fed Chair Powell speaks. We will see what happens and what comes from that. Thursday, the 15th of April, 2:30 a.m. in the morning, we have unemployment rate for the Aussie dollar. Be very interesting because the Aussie dollar has actually been doing well since its last release. And we can see that it's been holding up some markets, especially versus the New Zealand dollar and also the US dollar as well. So it'll be very interesting to see how this plays out. We also have more red folder news on Thursday, 1:30 p.m. Core retail sales, and the forecast is actually better, which is very interesting. Oh boy, I really hope that the dollar does very well next week, because just it'll be so easy to trade. And then Friday, yeah, not worried about this. So that's the news for next week. Look out for it, and let's roll on to the weekly outlooks. So as we usually do every weekend, we go over 11 pairs in this list here, from pound USD all the way down to gold. What we're trying to do here, traders, is just get an overall bias of the market sentiment, trying to identify clear trends to work with, finding confluences to trade other pairs, and also identify currency strength so that we know which currencies we can put our money on. So the first pair we're going to take a look at is pound USD. Now, we've got a lot of red folder news next week for the dollar, all expected to be good. So if so, then there is a very high chance that we're going to continue to see this structure continue into the downside. We can already see that the overall movement to the outside has been violated. The brick wall has been broken for the first time in a very, very long period of time. And as you can see, we've seen a really strong movement to the downside. Now, what I'd like to see price do next week is trade below 37.73 as either a potential retest level in the market for targets back down to some of these lows here at 36.83. Giving us a 87, 88 pip range to be able to take advantage of some great trades. If you're not planning to trade in this range next week, well, it's not really a range, but we have traffic to the left where you can see price was being held up around 37.25. We have broken this level yesterday on Friday, or whenever I plan to post this on Friday. So it'll be very interesting to see if we can have this continuation. I would much prefer price to break 36.83 just to give me that added confluence, get that added confluence as well from the news releases to indicate dollar strength. And we're not seeing much from the pound at the moment. So it will be really, really, really interesting to see what happens once we break 36.83. I'd much prefer to take a play at the break of these lows here, look for that retest, and then probably target some daily or weekly lows, depending on what time frames you use. For me personally, I just focus on my risk to reward and my management, break-even trade, stop losses to half, trading stop losses, whatever it is you may be using. rather than targeting levels. But if it does break and we get some good news, then listen, I think this will be the play of next week. Let's see what happens. Next pair we'll take a look at is pound JPY. We can already see the confluence from pound USD here, that there's not really much happening with pound. The pound seems to be weakening, dollar is strengthening, yen is strengthening as well. And you'll start to see that as we go through the other pairs today. You can see that the pound was pushing to the upside, very much like pound USD. We've finally broken this brick wall for the first time. So any buys above this brick wall here, you would have been good to go as long as you had your stop loss below it. Once we have a violation and now we start to put in lower lows and lower highs, there's a very high chance now that there will be a continuation to the downside with this new trend that's formed. And the level that I'll be looking at next week is 149.99. If we get a break close below this level, I'll feel very confident to take this as a play back to the downside around 148.75. I don't suspect that the market should be breaking above 150.99. If we do, maybe it'll be a gap up and a correction back to the downside. But I think the safest play and the highest probability of this play playing out is waiting for 149.99 to break, looking for those retests around this level. If you're a retest trader, if you're a breakout trader, all well and good, just wait for a strong break. And then I think we got some real serious targets back to the downside at 148.75, looking at over 100 pip move here. Oh, wow. It's absolutely beautiful. Don't think this market screams buys to us, so don't even look for them just yet. I mean, if we do break 150.99, we can start looking for possibilities if the market structure starts to form. But stick with the trends. It's much easier. It will give you a higher probability of winning your trades, which will then just add to your win ratio and your profitability in the long run. So this is the play for GJ next week. The next pair we'll take a look at is Euro Yen. What you're going to start to see across the board is Euro strengthening and Yen strengthening for some reason. Now, we can already see that the dollar is strengthening as well, and you'll see that with USD JPY in a moment. But once you bring two strong currencies together, you will find that they will range. Or if you bring two weak currencies together, you'll find that they'll range. More often than not, investors are going to be putting their money where they know they're sure that the strength is at and that there's a high chance that that market will move, i.e. in this instance, pound weakness or dollar strength. At the moment, you can see euro and yen is doing nothing but ranging. And I would say next week, in order to find a play on this, we're going to need to see a breakout of this consolidation or this sideways moving market. The areas that I am interested in is these areas here around 130.63. A break above wouldn't necessarily mean buys immediately. Make sure you're looking for that break and retest, looking for that added confluence of support like wick rejections, engulfing candles, whatever it is you may use, so that you know that that breakout is a true breakout and you're not going to get involved or be trapped by some sort of breakout and a break back in. Now, because it's ranging, even though the structure of the market is still up, we do see this more as bullish than bearish. However, in a range, there's a depletion in buyers and sellers in the market. So if the markets do not break above 130.62 and we start pushing to the downside at some point next week, I'll be looking for a sell opportunity at 129.68. This is a break below for sells. Let's get this right before somebody thinks that's some sort of support level and starts taking buys off of them. Okay, so this is break sells below. You get the point there, right? Break sells below 129.68. Now, again, I'm not going to be looking for immediate sells below this level. I will need to see price retest this structure, create some sort of confluence like wick rejections, engulfing candles, and decision candles, potentially breaking a new low if it's formed, and then looking for continuations, whatever it may be. Just look for that solid confluence so you're not being trapped by those breakouts and breaks back in. Looking at the other structures of the markets, I will say, ladies and gentlemen, there are probably easier structures to be trading next week. The next pair that we'll take a look at is USD CAD. Now, this is very, very interesting because we are starting to see dollar strength. Now, the question is, when we look at GU and now we look at USD CAD, is it that the dollar is strengthening or is it that the pound is weakening? is a very difficult one to call, especially looking at USD CAD. And this really throws some spanners in the work here, because the overall behavior of this market is illustrating sell bias behavior. We have the market failing to break above 26.25 for a long period of time. At the same time, we're making lower lows and lower highs here, and it just doesn't add up. The thing is, with the news that's coming out next week, if we have really strong positive news for the dollar, then we may see this continue to range. And if you're looking for a trade, you're only really going to be looking for a break of 26.25. The range is quite big, so you could trade within it, but I would say the best play is just to wait for a break above or below here. If I'm looking at this from a price actions perspective, I see this more as sell bias than I do buy bias, even though we're in the range. So I wouldn't be opposed to waiting for price to break 25.18 for a retest and then looking for some sort of targets down to 24.67. It will be very interesting. Be careful with USD CAD. You could be tricked next week. As I said, there's much cleaner structures to be working with. I think for now, I have to stick with price action until the news tells me otherwise. And I think the play that I'll be looking for is the break below 25.18 for potential targets 24.67. Let's see what happens with this one. The next pair that we'll take a look at is USD JPY. Now, again, we have a situation here where we're starting to see that the dollar strength is not adding up as much as we'd like it to. So we're starting to gather the picture here that the pound must be very weak. We know that the yen is weak, strong, and we've seen those movements from some of the pairs that we've analyzed already. The overall sentiment of this structure has broken a brick wall for the first time, creating lower lows and lower highs. And we have an area in here on the market where price is creating a double top of the previous lower high structure. If you're new to trading, you're not familiar with this pattern, a double top in a downtrend off of the previous lower high is a great pattern to be trading across the board, no matter what time frame you're trading. Take a look at your charts, see it for yourself, and if you can add it to the arsenal, then you'll be in a pretty good position to win some great trades there as part of those trend continuations. The play that I'll be looking for next week, depending on the news again, if price breaks above 109.95, we start to create a higher low. I'll look at this or view this as the low, higher low, potential higher high. So a break above 109.95 here, I'd be very happy to look for some targets back to some of these highs around this level. We're calling this level 110.45, okay? But if the structure of the market continues to respect the previous lower high, creating a double top, what I'd wait for the best play next week is for price to break 109.07, and then I'll be looking for some targets back down here at some of these lows. Now, the reason why I've got target sells here is because a lot of the analysis that we do, you will find the markets do not pull back to some of these key levels because the movement already that has been in place since Friday will continue that behavior into Sunday open. You'll have a gap down, a slight correction, and a continuation. If you're trading intraday timeframes, you're able to identify patterns and trends, break and retest structures, then you can trade this back down to some of these lows. But if you're waiting for true confirmation and to get really involved in the market once there's a strong sentiment, just wait for the break of 109.07 and look for some targets. With almost a 58 pip range here, you'll be laughing on USD JPY. You'll be really laughing on USD JPY. The next pair we'll take a look at is Euro New Zealand dollar. So you remember when we took a look at Euro yen up there, we mentioned that we're starting to see strong yen, strong euro. Now, with the structure of this market, after price has broken above 68.57 here for the first time in a long time, and we're talking very convincingly, I would say that I will be more than likely, preferably looking for buy opportunities. In order for those buys, I would want to see price break above 69.83 here, just to clear some of these wick rejection areas in the market. It is a critical level. It is a structural high, meaning that there's a very high chance that price is going to react from it. So with the added confluence of the structural high, the overall sentiment of the euro being strong and price breaking above 69.83, I think I'll be happy to take a play here. Back to the upside if given the evidence with those wick rejections, indecision candles, engulfing candles, and patterns and processes. Now, there's a flip side to this. As prices come into a critical level in the market where it hasn't broken for a long period of time, once price had this strong rally up to these highs, we can see that it sold off. That means we know there's orders here for sure. How many we don't know, and we don't know how many buyers are in the market either. So I would say this, view this reaction here as a reaction to this level. Even though we haven't tapped into it, don't disregard it. If price breaks below 68.57, I would not hesitate to look for a play back down to 66.88 as a correction previous to the move that happened last time. The overall structure is not screaming buy bias, higher highs and higher lows. It is more rangy from this high at 69.83 to 66.88. So I'd be happy with either or, to be honest with you. The thing is, the euro is showing more strength across the board than anything else. So I think buys would be the safest option to eliminate two plans. But if you're an experienced trader, then a break of 68.57 looks like a good play back down to some of these lows. Let's wait and see what happens with this one next week. Next pair we'll take a look at is Euro Aussie dollar. So just adding confluence to what we're seeing with Euro yen, which is two strong currencies together, consolidating, then Euro New Zealand dollar, creating structure that looks more bullish than bearish. Adding that confluence here with Euro Aussie dollar, we can see the structure of this market is more bullish than bearish. Now, again, we're at a critical level here in the market where price is failing to break above some of these levels here. Just to make sure that you can identify this, we're seeing the reactions. Now, the thing is, if the markets are trending up, making higher highs and higher lows, we are taking out previous structure highs, then I would say that the first plan of action next week will be for price to break above 56.12, look for a retest, then a continuation to the upside. But again, just like with Euro New Zealand dollar, I would not hesitate to look for sells if price breaks below 55.57, as we are at a critical level. As you can see, after we made this high, price sold off. You can see price tried to break above this level with a huge rejection, meaning we know there's sell orders here or buyers are at least taking some profits. So if we do break below, I would not hesitate to look to take advantage of this 80 pip range back down to 54.73. But if you're looking for a concrete plan, the no-brainer option is just to continue with the structure, which is higher highs and higher lows, and look for those buys once price breaks 56.12, and then look for those retests for a continuation up. The next pair we'll take a look at is Euro USD. Now you can clearly see the overall structure of this market is bullish. We are clearly making higher lows and higher highs. The only play that I'm looking for next week in conjunction with this buy structure is a break of 1944. We can see it's a very, very interesting level previous after price made a high and a retest of the previous structure over here at 1991. We had this strong sell-off to the downside. We now are seeing this movement pushing back up into some of these key levels. So only until price breaks 1944 would I be looking for a retest and a continuation back to 1991. But if we don't break above and we start to move sideways, we start to violate this brick wall because dollar is strengthening for whatever reason, added confidence maybe from the news or something, then I'll be happy to see price break 1862 for a potential reversal, then a retest, and then some sort of continuations to the downside. Looking at first targets around some of these levels here, more of probably a management area in the market. And then if we do get some really solid news to add some confluence to dollar strengthening, then potentially target some of these major lows later towards the end of the week. Next pair we'll take a look at is Aussie dollar USD. The overall structure of this market is ranging. I am not interested in this pair at all until the market clears up. So that's my analysis on Aussie dollar USD. The next pair we'll take a look at is New Zealand dollar USD. I am also not interested in this pair whatsoever. The overall structure of this market is consolidating and moving sideways. I'm not interested. There are other pairs I could be focusing on next week. The final pair we'll take a look at is gold. Now, this is really, really interesting, and I'm really looking forward to analyzing and forecasting this pair next week. The level here that we're seeing as the break above buys on gold at 1758.96 is a critical area in the market. This is a major high where price has not broken for quite some time now. We're talking, I reckon, around 4 weeks, maybe 3 to 4 weeks. If gold manages to break above 1758.96, I would not hesitate to look for the first buying opportunity and look to target some of these structural highs moving into next week. Now, sorry, maybe not next week, but in the near future. But I reckon if we fail to break above 1758.96, there is a very, very high chance that we're going to start to see this market pull back. Overall, the structure on gold has been consolidating, as you can see here. Now, with this in mind, I would say to myself, well, look, if price doesn't break above this major high here, and we start to see the market pushing to the downside, then there's a very high chance that we're just going to continue ranging between 1758 and 1679. That's just my bias. So the play for me next week will be to monitor the dollar news. If we get positive news, then I'll be more than happy to wait for the break of 1723 for sell opportunities, which would mean my management levels at 1707, because I don't think that I'd want to be looking to, especially from a higher time frame perspective, wanting to be taking off my sells too soon, because I do believe that if we start breaking below 1723, there is a very high chance, based on the range that we're in, that we could continue back down to 1679, which is a huge movement. Now, I know for the majority of us, including myself, I would not be taking advantage of the whole move, but I don't think that I want to be taking any 1-to-1s or 1-to-2s or 1-to-3s. I reckon we could be targeting something much greater if you get a good stop loss range. So the idea is this: if we break out of this range that we've been sitting in for a while, we get above this critical level at 1758, buy bias all day long. If we don't, then the next play is the break of 1723.18, and then looking for potential targets at 1707 or management levels for break even, trailing stops, or partial profits, and then final targets for the end of the week back down to 1679.66. So that's my analysis on gold and also the 11 pairs. I hope you've enjoyed this. I would really love to get your viewpoint on the markets and some of the pairs and currencies that we looked over this week. Drop a comment in the comment section. Smash that like button for me. Share the love, please, family. Just share the love. Turn on notifications. Subscribe if you haven't. And until next time, continue to trust the process.